Morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading month. But first, let's go straight to our top story. The government is sticking to its lower GDP target of 4 to 5% for 2021. And for this full year target to be achieved, the economy needs to grow by 5 to 5.5% in the second half. That's according to the Finance Department. Now, as of the first 6 months of the year, GDP growth stood at 3.8%. The economy expanded by 11.8% in the second quarter. That's a turnaround from the 3.9% contraction in the first 3 months of 2021. The economy also exited recession in the April to June period. That's after 5 straight quarters of a decline. The government has initially set a full year GDP target of 6 to 7%, but it slashed this to 4 to 5% in August to reflect the effects of stricter quarantine protocols in Metro Manila at the height of the Delta surge. Third quarter GDP figures will be released on November 9th. Now, PEZA will renew its appeal for an outsourcing remote work scheme based on company revenues. That is after the Fiscal Incentives Review Board, or FIRB, stood by its new work from home rules. The FIRB retained its decision to allow outsourcing firms operating within economic zones to keep work from home arrangements until March of next year. But there is one condition: these companies must have 10% of their employees on site. PEZA previously said the new rules requiring part of the workforce to physically report to eco-zones would cause problems amid the still ongoing pandemic. And so the recommendation was to allow remote work for up to 90% of the company's total revenues. Plaza pointed out that more workers will be forced to report to the office physically if the work from home scheme is based on the number of workers rather than based on revenues. So while PEZA will now guide outsourcing firms in implementing the new work from home scheme, Plaza said they will continue to send an appeal for a revenue-based arrangement. Okay, guys, we are waking up from quite a long weekend slumber, but it's going to be a very crazy week for earnings this week. And not just that, economic data also coming out. Let's kick off with some economic data. So this week we will have employment, inflation, trade figures, plus we also have the US meeting that's going to be on November 3rd. And this morning we got the October PMI here in the Philippines. You can see that on my terminal. We've risen to 51. Now note that above 50 signals an expansion. That's the highest we've seen since March. This from 50.9 reading in September. And last year, we were actually in contraction mode at 48.5. So this is now the highest reading since March of 2021. And again, the second consecutive month of an expansion. Now let's move on to how our markets are opening after that one-day break, so to speak. Down in the red, that's down by 1.4% to just above 7,000 after having already broken above 7,300. I guess we are back to that. We have, this comes even as we had a lot of optimism over in Wall Street overnight. We had S&P 500, the NASDAQ 100 at record highs. They say that that's because 80% of the companies that have reported the third quarter earnings, at least over in the US, were topping the Wall Street estimates. I don't really know whether that will be the same case here. Nevertheless, we do have a couple of big companies reporting. Aboitiz Equity Ventures, first of all, up by 0.4%. This, as they've said, that their third quarter net income was up by 39% to 6.1 billion pesos year on year. Now, they did mention, however, that they had non-recurring gains of 252 million pesos from foreign exchange revaluations of US dollar assets. But you can see on your screens here the breakdown of those 9-month income contributions. Power, 58% of that. Financial services, of course, they do own Union Bank, and that was released last Friday, was 26%. Food, 7%. Infrastructure, 6%. And real estate, 3%. And speaking of the power arm, you can see Aboitiz Power up by 0.16% to 32 pesos and 15 centavos. That's on the back of their third quarter net income surging 70% year on year to 5.6 billion pesos. They did, however, mention that there were lower non-recurring losses, but This, according to their CEO, Emmanuel Rubio, energy demand has been continuously picking up, adding that the renewable energy projects are also in various stage of development. The baseload plants, however, have been performing well above the targets. And a couple of other news here before we move on to our guest Jollibee. They're committing 225 million Singapore dollars, it's around 9%, 90%, to fund the owning of Tim Ho Wan. And on the telco space, you've got Globe's Mint, that of course owns Gcash, getting 300 million US dollars of funding from Warburg Pincus and Bow Wave. That will bring Gcash's Mint to be valued at more than $2 billion after that fundraising. We will be keeping tabs of that. Meanwhile, let's bring in our guest here to chat with us about all of these developments. We've got Japhet Tantiangco of Philstocks. Good morning, Japhet, and welcome back.
Good morning, Ma'am Dani. Thank you very much for inviting me to your show.
Okay, Japhet, ang daming nangyayari. Let's go straight to the earnings, shall we? And the quick reaction here. Let's kick off with Aboitiz Equity Ventures and Aboitiz Power. Of course, Power has been largely in focus with the reopening of the economy, with a lot saying that, with the oil prices rising, the cost rising, that might be benefiting the power companies as well if we start using or having more demand. But tell us, what are these figures of the third quarter telling you?
Well, with respect to the third quarter figures, we see that there's really this ongoing recovery with respect to Aboitiz Power and with respect to its parent company. First, with Aboitiz Power, as you mentioned, yes, we're seeing a recovery in energy demand. This is the economy further reopens. We're seeing it from all sectors, from the residential, from the commercial, from the industrial space, and at the same time, you're seeing a shortage as well. We have tight supply in energy, which is causing a rise in its price, and this in turn is benefiting Aboitiz Power, and that explains the good financial results, at least for the first 9 months of 2021. And of course, this is benefiting its parent company, which is Aboitiz Equity Ventures. So the boost from its power sector and its other sectors, such as including the banking. So we're seeing a good recovery for the conglomerate, and which of course which explains the stock price movement with for the share price movement for these stocks.
Japhet, what about the banking unit? We had Union Bank as well reporting last week. And can you compare that to the rest of the big banks? We've had BPI and BDO reporting, and what it tells you about whether this sector is finally going to be recovering, even as we've got slow loan growth recovery, and as well as a view for perhaps even more non-performing loans.
Well, with respect to the banking sector, the trend for this year so far is that their revenues are tepid. Revenues are tepid because of bank lending. So bank lending has not regained its strength for this year, and that is because of the lingering uncertainties in the economy caused by the COVID-19, which in turn is weighing on confidence, on borrowers' confidence. At the same time, banks have remained risk averse in order to avoid a default risk or credit risks. So because of that, revenues, in particular interest income, has not been performing greatly. But this is being tempered, or the low revenue, the decline in the revenues, or the revenues that are not performing that much, it's being offset by the lower loan loss provisions. So for most banks, loan loss provisions have been lowered, and this in turn is resulting to a great reduction in their costs, which in turn is leading to a higher bottom line for 2021 compared to the same period last year. So that has been the trend of the banks. Now, with respect to prospects, of course, given that the economy is further reopening, given that the COVID-19 situation is seemingly being put under control, then we expect, of course, with the recovery of the economy, we're expecting that borrowers will have an easier, more capability to service their debts, and this in turn is going to lower the perceived default risk, which in turn is going to lead to a lower loan loss provisions. At the same time, with the reopening of the economy, or with the recovery of the economy, then we're seeing more bank lending happening moving forward, which of course is in turn is going to help our banks and their financials.
Okay, Japhet, just for our viewers to understand here, it appears that our markets are not yet reopening. The PSE had announced yesterday that they would be reopening today, so we're not quite sure yet why this isn't happening yet. But nevertheless, let's talk about the other earnings that we have been seeing on Friday, at least before this holiday. We also have URC having released their earnings. That was 2.47 billion pesos in third quarter net income versus 1.97 billion pesos. Are you happy with that? And how does this relate to the demand pull that you're going to be seeing in the fourth quarter versus, of course, the lockdowns and, of course, the unemployment that we're seeing affecting consumer spending in the third quarter?
With respect to URC, if you're going to look at its financial performance, the bottom line of URC, its growth was primarily driven by by the lower tax expenses because of the create law, and at the same time it was because of one off with the sale of fixed assets. If you're going to look at its operating income, it's still it's lower compared to 2020. This goes to show that cost efficiency wise, so URC is having a problem there, and which explains the lower operating income. Now, moving into the fourth quarter, yes, given that the economy is reopening further, and add that we're going into the Christmas season, so we're expecting more consumer spending. But of course, this could be tempered somehow by the inflation, by the high elevated inflation that we are experiencing right now. But nonetheless, there is going to be a strong consumer spending expected in the fourth quarter, and this is going to help URC's revenues. That's what we see for the fourth quarter of 2021. However, if a URC will not be able to put under control its the main problem that we see right now, which is its cost management, then it's going to serve it's going to serve as a general problem for the company, at least on the operating income level.
Okay, so there's still a lot of cost management to be done, but
Mm.
you do see the demand pull coming in on the fourth quarter. Which earnings are you looking forward to that you think might be surprising? Just for our audience to note, tomorrow we have A-REIT and Ayala Land, as well as Century Pacific Foods looking to report. Of course, we're not 100% sure, but that usually is the case. Thursday, we've got ASEN, ICPSI, RRH, IPLDT, and on Friday, Pure Gold, SMC, and MREIT. Is there going to be some sort of sector trend, which will be the ones that are the ones that will be better than expected compared to the ones that we've already seen reporting?
Well, in general, I believe investors are already anticipating that third quarter, with respect to financial results, third quarter for this year would be better compared to last year, but that will just be because of low base effects. I believe that's the general expectation. With respect to the quality of earnings, it may not be that much given what the economy has gone through in the third quarter, the implementation of the stringent quarantine measures, and the surge in COVID-19 cases. Nonetheless, we're still expecting some companies that would have strong earnings for the third quarter, with good quality, and that includes, of course, the consumer retail. So you may want to watch out for Robinson's Retail Holdings as well as Pure Gold, given that these consumer retail companies are selling essential goods to consumers. Then we expect that there will be strength in their earnings. We're also expecting from PLDT, given that we saw that demand for data services, for internet services, has remained stable still because of the current conditions of our economy. and that's those are where you also have CNPF. We're also expecting strong earnings from CNPF. It's strong performance expected to continue, given the strong demand from strong consumer demand. So those are the earnings that we are expecting so far. For others, that's where investors could look for surprises if we see, strong earning revenues and earnings performance from our property companies. Then it would be a surprise to investors, and that could be the time for them to get into the said stocks like Ayala Land and as well as the REITs.
Okay, so watch out for possibly the property companies. And
Mm.
finally, Japhet, just for the levels of the index, you were already breaching the 7,300 levels, and now we have quite some optimism. The PMI is in positive territory. We also have the fact that it might become alert level 2 in the near term. COVID cases quite low. But still, as you mentioned, you have these third quarter earnings that need to be digested. What levels should we be seeing in the short term, particularly for this week as we recommence trading?
Well, with respect to the market, so far we're able to hold our support level at the 7,000, range. And moving forward, as you mentioned, a lot will be digested from third quarter earnings will be digested. Investors will be looking for surprises. Of course, investors are still expected to. A lot of things are going to happen this week. So first, you'll have the meeting from the Federal Open Market Committee. So that's one thing that investors are going to watch out for. I think the tapering of the monetary stimulus is already given, but given the
Mhm.
persistent inflation in the US, I believe investors will be watching out for cues from the Federal Reserve if they're going to start their monetary tightening soon. If we see such, then it's going to serve as a downside risk for the local market. And other than that, investors will be watching out for our inflation data. Inflation data, if it comes out faster than what we saw in September, then it will also serve as another downside risk for the market. But if we don't see such downside risks, then and if we see surprise in earnings in the third quarter, if we see a continuous decline in our COVID-19 cases, which would raise the possibility that social restriction measures will be further eased, at least in the government's next deciding period, then the market may rally and it could move towards its next resistance, which is at 7,300.
Okay, so a couple of things na lang to be watching out for if we
Yep,
get that through those hurdles of inflation, as you mentioned, and also Fed policy. We might be going back to those 7,300 levels in the
yep.
short term. Thank you so much for those insights, Japhet Tantiangco of Philstocks.
You're very much welcome.
Checking in on the biggest headlines, this from the Philippine Star. More Filipinos are still opting to keep their money in banks. You can see on your screens here. This is as deposits grew by over 8% to 12.1 trillion pesos as of the end of August this year. The Bangko Central said the industry's deposit base consisted of almost 6 trillion pesos in savings deposits, about 4 trillion pesos in demand deposits, and around 2 trillion pesos in time deposits. The BSP said savings deposits remain the primary source of funds for the banking system. Now, foreign currency deposits owned by Filipinos also inched up by 2.5% to 2.1 trillion pesos by the end of August. And as a result, the total assets of Philippine banks increased by over 7% to 20.6 trillion pesos compared to the same period of last year. Now, as part of its COVID response measures, recall that the Monetary Board slashed interest rates by 200 basis points, bringing the benchmark rate to a record low of 2%. It also reduced the reserve requirement ratio to free up more funds for lending. And here's another from the Philippine Star. The enterprise arm of PLDT expects the rollout of 5G networks to fuel the demand for data centers in the Philippines. PLDT Enterprises Victor Aliwala said the PLDT Group is working to make the Philippines the next preferred geographic destination for global tech giants. Aliwala said they now have over 5,000 5G sites to improve the internet experience of customers. PLDT's current international cable network is supported by 14 global subsea cable systems, with an additional subsea cables expected to be operational by the end of 2022. And that's a first look into the business day. Today's Tuesday, November 2, 2021. Catch Business World live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.